Welcome to our podcast, where we share our professional knowledge and experience for those considering commercial mortgages or loans. If you are in need of commercial mortgages or loans, contact us for a no-obligation free consultation. Let's start today's episode. A guide to investing in commercial property. Is investing in commercial property profitable? Investing in commercial property has the potential to generate significant returns, making it an attractive option for investors looking to grow their wealth over time. While it may be a complex and costly investment, owning a commercial property can be advantageous as it provides a tangible asset that can be used as collateral for future borrowing. Commercial property investments can also provide a stable income stream through rental payments, making them an attractive option for those seeking a regular source of passive income. Additionally, commercial property investments can offer portfolio diversification, reducing overall investment risk. Investors can choose to invest in commercial property directly or indirectly through property funds, REITs, or investment trusts. Indirect investment can provide exposure to a broader range of properties, while direct investment allows for greater control over the asset. Overall, investing in commercial property can be a sound way to grow your wealth over time, provided that you do your research and understand the risks involved. How can I develop an existing property? Developing an existing property is a popular form of commercial property investing. It involves purchasing a property with the aim of renovating or converting it to another use, and then selling it for a profit. Property development can be attractive as it allows individuals to use their own skills in building and renovation, along with the necessary finance to complete the project. To participate in property development, a sound plan and realistic budget are essential for a lender to invest in the project. Property development finance is a critical aspect for both new and experienced developers in the real estate sector. Understanding the various types of available financial options and the application process will not only ease the pressure on your cash flow, but also impact the success of a project. Can I achieve high yield with commercial property investing? The profitability of commercial property investing varies depending on the property type, location, and market conditions. Yield, which is the return on investment, is an important factor to consider when evaluating the profitability of a commercial property investment. A high yield can be achieved by purchasing a property at a low price and charging high rent. Conversely, a low yield can result from a high purchase price and low rent. It's important to note that a low-yielding building, such as a large office building in central London, may still be a profitable investment due to the potential for capital gains if the property value increases. Commercial property investing also carries risks, such as liquidity and volatility. The COVID-19 pandemic has also impacted the commercial property market, with some sectors, such as retail and hospitality, experiencing significant declines in demand. Overall, commercial property investing can be profitable, but it requires careful evaluation of market conditions and investment risks. What are the opportunities in the buy-to-let property market? Buy-to-let property investing has been a popular area of investment for the last few years, appealing to both small and large investors alike. However, there is no guarantee that current conditions will remain the same in the future. Investors who require a steady income to fund their lifestyle or retirement cannot always rely on the type of return that buy-to-let property investments may offer. Despite this, the appetite for residential property renting remains consistent, and the absence of a concerted house building program from the government suggests that the demand for residential properties will remain active for some time. Many lenders understand and like this market, and rates can be competitive for the right borrowers. It is important to consider the longer lease structure, buildings insurance, and maintenance costs when investing in buy-to-let property. While rental yield can provide a steady stream of income, it is important to ensure that the investment is financially viable in the long term. Overall, the buy-to-let property market can still offer opportunities for investors with different investment goals, but it is important to approach it with caution and do your due diligence before investing. Frequently asked questions. What are the potential pitfalls of investing in commercial property? Investing in commercial property can be risky, and there are several potential pitfalls to be aware of. One of the most significant risks is the possibility of a downturn in the market, which could lead to a decline in property values. Additionally, commercial properties can be expensive to maintain and require ongoing investment to keep them in good condition. There is also the risk of tenant default, which can be costly and time-consuming to resolve. What factors should you consider when investing in commercial property? When considering investing in commercial property, there are several factors to take into account. One of the most important is the location of the property, as this can have a significant impact on its potential value and rental income. Other factors to consider include the condition of the property, the type of tenants it is likely to attract, and the local rental market. It is also important to consider your own financial situation and investment goals before making any decisions. How can you determine if a commercial property is a good investment? There are several ways to determine if a commercial property is a good investment. One of the most important is to conduct a thorough analysis of the property's potential rental income and capital growth. This can involve researching the local rental market, as well as considering the property's location, condition, and tenant profile. It is also important to consider your own financial situation and investment goals, as well as any potential risks associated with the property. What are the benefits of investing in commercial property? Investing in commercial property can offer several benefits, including the potential for long-term capital growth and regular rental income. Commercial properties can also offer a degree of stability, as they are often leased on long-term contracts to established businesses. Additionally, commercial properties can provide diversification for your investment portfolio, as they can offer a different risk profile to other asset classes. What types of commercial property tend to have the highest ROI? The types of commercial property that tend to have the highest return on investment, ROI, can vary depending on a range of factors, including location and market conditions. However, some types of commercial property that have historically performed well include office buildings, retail spaces, and industrial properties. It is important to conduct thorough research and analysis before investing in any type of commercial property, as the potential ROI can vary significantly. How do people typically invest in commercial real estate? There are several ways to invest in commercial real estate, including direct ownership of properties, investing in real estate investment trusts, REITs, and investing in private equity funds. Direct ownership can provide greater control over your investment, but can also be more time-consuming and require more capital upfront. REITs and private equity funds can offer greater diversification and professional management, but can also involve higher fees and less control over your investment. It is important to consider your own investment goals and risk tolerance before deciding on the best approach for you. For more information, you can contact us by clicking the link in the description of this video. Thank you for listening to our podcast. We look forward to coming together again in the next episode to share more information and experience with you. For now, goodbye.